Greetings and here. We are back here with another video. So guys, on this session here today, we're going to talk about a few things that need to happen before the market maybe tries to turn around. So guys, remember to like, share, comment, and also subscribe on our YouTube channel so that you get first-hand notifications when you upload a new video. So guys, let us move forward now. So remember that these videos are mainly for educational purposes, not trading or investing advice. So people are liable for their margin deposits, so it's important that you do not trade money you cannot afford to lose. So these videos are mainly for educational purposes, not trading or investment advice. So the 7 things that need to happen before the market actually tries to stage a comeback. So number one, we have seen that the pandemic also deteriorated the markets, right? And also while we're still at the pandemic top, we saw a war that was currently happening there in Ukraine, which also pushed inflation going higher, and then we saw higher energy prices, and also we start seeing interest rates moving higher around the globe, and also the strength of the US dollar moving higher, and also we almost saw a crypto crash. All these things, they happened all in the space of the first 6 months of 2022. So we've seen a lot of market action and market volatility in these first 6 months of 2022. So if we can move forward now, most assets they have fallen to record numbers now. So if you could go back in time and look at this chart right here now. So in 2001, the market fell roughly about 7.3%. So that was pretty much something like maybe the dot-com bubble where it burst. So the market actually reacted in those news net. So this was 2001, plus there was also the 9/11 that happened, the terrorist attack. That was the planes that got in New York in 2001. So the market fell in those days. So if you could go even back in time, in 1937, the market moved to 10%. No, it moved the lows of almost 10%. But if you could go back even more further in time, we've seen that in the 1940s, in the 1939s, the time of the Great Depression, we've seen the markets almost swelling about 20%, and then in the financial crisis in 2008, we saw the markets declining about 12% in the first half of the year. So this year, what actually happened in 2022, the market actually declined more than 20%, like the S&P 500 declined more than 20% in the first half of this year. So seeing those record lows again, if you can move forward, we've seen that the S&P 500, the largest 500 companies, the index there in the United States, we've seen some worst market performance in the first half in over 50 years. We've seen that the S&P 500 has fallen over 20%, and then the Dow Jones over 31%, and then the tech-heavy Nasdaq, it was the one that was hit very hard. It fallen over 36%, close to 40% there in a single 6 months. So this is just the worst market performance, the worst market performance in over 50 years. So what are the things that need to happen? What are the things that need to happen? Because we've seen that energy prices, what they actually happen is that the most key indicators there in the world, such as the 10-year yield. So the United States 10-year yield treasury bonds going higher surpassing the 3% level. Even globally, saw some German bonds there as well, even passing those extreme levels. So though the yield curve also the yield curve going higher, it pushed energy prices, and also the geopolitical issues puts a lot of pressure in other currencies, and also pushed the US dollar going high. So these things, they interlink with one another, because if something happens to the other, it affects the other as well. So geopolitical issues have been the major driver within the first 6 months of this year. We've seen there was a war. We've seen a lot of things that we have never seen in current market conditions. And this time around, the markets almost fell into a recession because there were also crypto assets in them. So crypto also on its own added to this weak performance of the market. So if we move forward, we've seen Bitcoin alone fell over 70%, and when it has fallen over 70%, there's never been a market crash with crypto assets in them. So this creates a lot and lots of confusion as well, because most people started investing around 2020, 2019, and then the pandemic happened. So most people were sitting at home. When they were sitting at home, they didn't have anything to do for almost a year. But what they did, they essentially started to buy these crypto assets. They started to push these crypto prices higher. But when the reality came, when the reality of the market came, that's why those crypto assets, they fell all those margins of around about 70%. So if you move, so the 7 things that need to happen before the market turns around. So number one, growth stocks need to come back. So which those stocks I'm talking about, those growth stocks that I'm talking about, we've seen that Netflix has fallen over 73% now, and Roku has fallen over 50%, over 80%. Palantir 62%. Meta Platforms, which was formerly Facebook, is down almost 54% year to date, and Shopify is down almost 78%. So if these stocks could actually come back and bounce back, we would actually see maybe perhaps the Nasdaq 100 starting to move higher. But as long as these stocks, if they are still down these huge margins, these huge numbers, it might be even harder for the market to stage a comeback. So that is just the number one key indicator here. And also, not just talking about these growth stocks, also the FAANG stocks as well, they have been down a huge margin. You've seen Apple has fallen, it has lost a lot of market cap. The billions and billions of market cap has been lost. Then Apple, and then Google needs to come back again, and then all the others, Microsoft, Nvidia, they also need to come back. So if these companies, the FAANG stocks and also the growth stocks could actually stage a comeback on the market, you might actually see the market starting to move in positive territory. Also, Tesla again. Tesla is also a huge company. It is also has a huge impact when it comes to the market overall, because the owner of Tesla, Elon Musk, has huge influence when it comes to market movements lately. So the FAANG stocks plus Tesla and also the growth stocks need to come back so the market could actually start. So number two, if the Fed could actually change their hawkish stance. So around the pandemic low, the Federal Reserve created an incredible accommodative environment for equities. They only keeping interest rates at a near zero low, but they also provided tons and tons of liquidity by purchasing more treasuries in the 6 weeks following the pandemic. So the Fed, if they could actually lower their stance on their rates in the pace they increase in interest rates, perhaps the markets could have some confidence again, and then it could try to to pick up, because now bond yields also needs to balance with the interest rates there, because if the interest rates fall, there's also rise in prices, and if the interest rates doesn't that goes higher, so there's just even a lack of balance there in equilibrium. So that is just our number 3. Bond yields are also important. So on the 4th one, the high US dollar is creating a really not safe environment for even safe assets like the Japanese yen, because we've seen that the dollar versus the Japanese yen, it has risen up to 130.23 yens, since it's the highest number since May 11, extending over a 20-year peak now. So we're seeing that the dollar has pushed and the yen to much more weaker levels, and also in line with the euro as well. So with the euro, we've seen the euro falling below the parity level, of which the parity level was $1 being equals to 1 euro. So the strong dollar needs to pull back, so that you might actually see maybe some improvements there in the market. So the 5th one, we need to see institutional buying to resume. So these guys that actually push the market, that actually creates liquidity in the market, they need to come back and show interest in buying the market. But if they are still not buying the market, we might actually keep on seeing these numbers like this. But if these guys do the work on Wall Street, those institutional guys could actually start to buy the markets again, we should see some movements there, because big institutions control the markets. That's why it's so important to learn how to interpret what they are doing, so we are not fighting the trend. So far in 2022, they've been selling stocks in every counter trend rally. So it's been important that if these guys they start to buy stocks, now you get to jump in when they start to buy stocks. So okay, this was the 5th one. So continuing with the institutional buying to resume. So orders to see a sustainable uptrend, we need to see consistent signs of big volumes coming into the markets on the up days. So far, the bounces have been low volume, short covered rallies. This you would normally see if in a correction. So again, patience will be required before this pattern changes, and investors have the wind against their back. So it's important that once we see the smart money coming in, that's where we would see that the market is trying to pick up. So number 6, a resolution within the Russia and Ukraine. This one is creating a huge problem there in the market. So it's amazing how many times geopolitical tensions is rising and the market goes into correction. So it's almost as if the market becomes vulnerable, and then the bad news adds the fuel also into the fire. So if there could be a resolution here, maybe we could see the higher effects of oil prices coming down, even food prices clearly coming down, because all of these things have been weighing on the consumer. So it will take some time for prices to come down, but some clarity that progress is being made to remove big uncertainty from investors' minds. So if we can see that there might be some progress here on between the war, maybe we can actually see the market's trying to recover. So number 7 is inflation. So if central banks could primarily use inflation targeting in order to keep economic growth steady and prices stable. So a 2 to 3% inflation targets, normally in central banks they target those numbers, but when prices in an economy diverge, the central bank can enact monetary policy trying to restore the target. So that's why we're seeing central banks increasing interest rates almost everywhere around the world. So inflation heats up, rising interest rates or restrictions, the money supply are both contractionary monetary policies designed to lower inflation. So inflation is a problem. So if I could offer my word of encouragement, So there are things that can change quickly. The market is in a discount mechanism and tends to trade on what will happen in 6 to 9 months from now. So in other words, although the news might get worse, but inflation is likely to be around for a while. So the markets will eventually factor this and then start turning around. So this just my 2 cents here, guys. The things that maybe needs to start to come back into the market, so that you might see some markets trying to move higher there. So guys, thank you. You can follow us on my socials. Those are all my business pages, and we are there on Instagram. We have a YouTube page, and then we have Facebook, and then we have Twitter there. So everywhere it's Stocks for Hope. So thank you guys, and also remember that these videos are mainly for educational purposes, not trading or investment advice. So it's important that people should not trade money they cannot afford to lose. So thank you guys. I'll definitely see you on the next video. So ngabonga.